Specialist retail company Verimark Holdings has reported diluted headline earnings per share of 6.9 cents for the 6 months ended August 2011 from 9.7 cents in the previous corresponding period. Basic earnings per share were at 7 cents from 9.8 cents. Verimark said the decrease in its earnings was due to a marginal fall in revenue of 2.2% and an increase in costs.
Verimark market cap 148 million, price earnings 4.6, dividend yield 11.5, but I don't think we're going to see that happen again. Anthony, I want to talk about the dividend, but first let's go to some numbers. We knew revenue was going to be down, we warned that. In fact, 6 months ago when they came out with year-end numbers, they said we can't carry on at this pace. They doubled earnings over 2 years. I think what perhaps was a bit of the surprise was revenue a bit down, but costs running fairly fast, and that took the gap wider on earnings.
Yeah, negative operating leverage is called. So slower revenue growth, I think it was down 2% on slower new product rollout, and higher costs as a result of an investment in their DC and new head office. Yeah, they had grown very rapidly over the last 2 years, 38 and 33% respectively in turnover. But it is an interesting little company. It is not hugely attractively priced, over 10 times earnings. But it's something that has turned around dramatically. There was, some time ago, this company almost went to the wall. Then was
and then almost delisted at 50 cents.
Tried to delist it. All of a sudden, it produced some rapid growth. Funny that, and here we are in a kind of on a consolidation phase in the company's growth trajectory.
I want to take that point in the consolidation. I suppose it's fair shot. They've grown massively fast. They're starting to consolidate and I suppose get ready for that next leg up, which will be probably slower growth, maybe 15 or 20%. And to be fair to them as well, second half of the year is when things really kick off. 60–70% of sales, because obviously it's the Christmas season and they're in all those stores. They're in 2,000 different games and macros, etc. around the country.
Yeah, I mean, I think it's an interesting business model where you've got direct TV sales and you've got also store within a store concept. But they talk about new products in the pipeline that are quite attractive. And I think if they can repeat or get back onto the growth trajectory, then this is one that's worth looking at. Operating margins have diminished rapidly from about 10.5 down to 8. Yeah. So it is, that's a concern. I see the cash flow is negative, so we want to see what's happening with the ability to generate free cash flow. But they have been through an investment cycle in terms of investing in the new DC, and hopefully that investment will pay dividends in times to come.
Thank you, Anthony. Let's bring in Yonatan now, our technical analyst at the wall. It looks like that chart was holding that support line quite nicely, but it's broken through markedly. Was that the trading update?
Yeah, this is, I wouldn't say it's the trading update, or could be a number of reasons why this actually broke through. But again, the long-term support level that you were referring to, again, from 2009, the fourth quarter of 2009, until towards the end of the third quarter of 2011, yeah. Very important break, this support level, and we saw a slight consolidation trying to hold those levels at that 160 level, or the 150 odd level. But again, with most stocks that took a hammering and a beating in August, losing close to 25%. So at this point in time, things are not looking so great for Verimark.
But it's broken through both the support line and the 200-day moving average. Surely that's a good sign. And if you look at your RSI, that's broken above 30. That must be positive news as well.
Well, the 200-day, obviously, if it moves back below the 200-day moving average, is not a great sign. That is a bearish move. And yes, it is oversold. The RSI is oversold, and that could be have a temporary relief as far as the price is concerned. So we could see a slight tick up on the price, but I don't think that this is going to be holding for the long term.
Anthony, to bring it back to you, you mentioned the cash flow going negative. They went from a positive of around 15 million to a negative of 7 million, a net turnaround of almost 24 million. They also paid out that 15 million dividend, which was the big chunk of it. And that's why I said that dividend yield of 11.5% looks nice, completely and absolutely historic. And unless they do serious cash in the next 6 months, there's going to be little or any dividend coming through for the year end.
Yeah, I would think that they need to build up their cash reserves to get the business growing again. They're probably going to have to invest more money into the product rollout cycle. That's going to suck up working capital. So I wouldn't be factoring in a dividend in the stock anytime soon.
Perhaps part of it would then have to reassess the dividend policy because it's very generous at 50% payout.
Yeah, I don't think going forward they'll be able to maintain that.
What about Africa? It's a store within the store. Then the macros in the games, that's Massmart. Massmart talks about Africa. They don't have much in Africa at the moment in terms of a presence there. Is that an opportunity for them, or is it too, as you said, they do their TV adverts. Verimark is almost a household brand in South Africa. Africa would perhaps be a heck lot tougher to establish themselves.
Yeah, I would think they'd have to partner with a mass discount store in the terms of their rollout into Africa. I think it would be very difficult to set up one's own logistics supply chain into Africa if you didn't piggyback on some kind of existing infrastructure. I think that Africa is an opportunity for them. I just would require them to partner or to choose the correct partners.
Back to the store within the store, 2,000 store within stores and only 200 of their own stores. So the significant bulk there. That certainly from Verimark's perspective must be a nice model. If it doesn't work, you can get out easy, probably much easier. I mean, I'm sure they're paying for parts of the electricity and the security and they pay the staff, but a nice model. And a new game pops up in Rosebank, presto, there they are. They just pitch up, day T-3 and put their product in. Absolutely,
it's hugely scalable. And that's the point. Very little capex in terms of rolling out into new growth nodes. I think that this business model is tried and tested overseas. I think that there's huge upside in telesales. And if you believe in the emerging African consumer, this is kind of a real growth area. It is very dependent on their buyers' ability to generate new ideas in terms of products. And I think it seems that the product life cycle is quite constricted. So you need a rapid kind of generation or renewal of the products.
There's new adverts coming through.
Absolutely, because it seems to me that they rely on stuff that's new all the time. The new, best, latest, improved type model. So I think that's what sells on a remote basis over the television, for example. But yeah, I mean, I think
it's Verimark hot or not?
At this kind of valuation, I'd say not. But it's one
you
to keep an eye on for the future.
So at this kind of valuation, not so hot. Yonatan, at the wall, what is the call? When do we buy? When do we sell? What makes it hot from a technical point of view or not?
Well, I mean, the sell should have come at the break of below the 150 level. That should have sparked the sellers in the market, which it obviously did, which ran the market completely down to the 120 level. Now you can see that this break in the August break, it broke all the previous lows during the whole year. The first quarter of 2011, the second quarter of 2011. So we're going into new low territory. So we will find this stock a lot cheaper. So if you haven't sold, we could have a bit of a respite in prices, and I would use any rally to offload.
How low could it go? Or was that how long's a piece of string type of question?
Well, if you take it, if you look at Fibonacci retracement levels, I suppose you've got the various levels. The first is a 38.2% retracement level. Now, we're talking about the retracement level from the 2009 levels of around the 35 cents all the way to above the 2 Rand level. But this could retrace up to 61.8% before it starts looking okay again.
So still some more
Thank you, Yonatan. Simon Brown, hot or not? Very much.
I like the business model. I agree with Anthony. Nicely scalable, but I at this point, no, not in the current multiples. I want to see the cash come right. I want to see their distribution center and the efficiencies come through there. But I really want to see their cash flows get strong again, and then we'll revisit it again. So right now, current multiples, not hot.
Not hot for Simon Brown. Let's move on now. Woolworths. Massmart has lured the brains behind Woolworths' highly regarded Farming for the Future project, an initiative aimed at helping local farmers to grow quality produce while helping the environment. Gweba Spinard, a soil scientist, has spent the last 5 years leading the team that developed and implemented sustainable farming methods with Woolworths suppliers.
Woolworths market cap 31.7 billion, price earnings is 17.7, dividend yield 3.8. Anthony, Refilwe mentioned they're stealing people from other businesses, companies, etc. That's par for the course. Woolworths is going this whole we are green, etc. I suppose in essence it's an ad campaign, it's marketing. I'm not saying that they're not green, but it really is that marketing point of view and trying to get more traffic through the door and sort of that good feeling when you buy something that's good for the earth.
Well, Woolworths has been able to grow their margin very well over the last several reporting periods, and it's attracted a premium rating as a result. This is perhaps one of the reasons why they've been able to grow the margin, but really is they've rejuvenated the brands and the product lines. So it is a company that has turned around very nicely and has attracted a large institutional following. Whether the margins are sustainable at this level, who knows? The Rand's lost 20% in the last several weeks. It'll be very interesting to see if they can pass the cost increases through higher import costs onto their consumers. We would doubt that they would be able to do that, so we're expecting margin compression going forward from here.
And particularly in the clothing space, because that will be the predominant of the import, where they've been sitting in margins of north of 15%, quite chunky. So space to come down, but certainly that's going to take some of the shine out of their earnings and their dividend, because they dividend cover of 1.5. So as soon as that starts to get hit, that dividend's going to start to get hit.
Absolutely. I think the clothing industry imports about 70% of the product. I think that Woolworths is particularly vulnerable. It's probably even higher proportion of its clothes are imported. In fact, I think they've even stated that they have moved to a complete import model in terms of clothing. I think that with the unions pushing for local content increases, they're very vulnerable. I think with the Rand volatility, I think they're also very vulnerable. It's very difficult. It's very easy to misprice, in this kind of volatile scenario. So I also think in the run-up to Christmas, with the volatility and pricing, they've already probably put ad campaigns below the line, advertising in the stores have all kind of been set at prices. It's very difficult to readjust those prices now. And I think the other comment to make is that the clothing retailers have done very well out of feasting on the carcass of Edgar's, and I think that low-hanging fruit has been picked. So one would imagine that in terms of growing market share at the expense of a competitor has been done.
That easy money is gone.
And that easy money is done. So, but it's got to be said that they have benefited from the very low interest rate environment. Most of their customers do have mortgage finance and vehicle finance. So low interest rates means that they can spend more at Woolies. And I think they've also benefited obviously from the very strong rand in the past. But both those things are questionable. Interest rates could go up from here, and certainly the rand is looking weak.
Thank you. Let's bring in Yonatan out the water. It looks like that Woolworths share price has been on a nice upward trend there, very, very nice bullish trend, and it looks like the relative strength indicator is showing some more upside potential.
Yes and no, Raphaelia. I think that before we get into Woolworths, I think it'll be good to point out that the kind of sell-off that we had in the beginning of August, the first 2 weeks of August, really changed the whole market scenario from a major trend perspective. So we're not looking at an overall bullish market anymore. We're looking at an overall bearish market. And this is one stock that has really bucked that trend. Now you can see that in the beginning of August, when the rest of the markets was a sell-off, this had really increased and broken through their major upward channel, and it really accelerated on the upside. We had a nice pullback to the old resistance, which now becomes the new support level. But again, a falling or a reducing tide sinks all ships at some point. So again, I'll be very cautious as far as new highs for this stock. I think that we could find a small pullback, certainly towards the 35 Rand level. And again, these lows over here that happened in the beginning of September at that 33.5, 34 Rand level needs to be watched very carefully. If a break does occur below those levels, we could find the share trading back at the early 30s. And
Yonatan, if we get a pullback in price in the next day or so, what I'm seeing is lower highs both on price and on RSI, which is suggesting that certainly that trend is turning more towards down. And whilst that 39 Rand price high was nice, it's not likely to be breached anytime soon.
I tend to agree with you, Simon. I don't think that high of that 39 Rand is going to be breached, although we have had the last couple of days just on the back of very low markets on that rally, which have filtered through to the Woolworths share price. Again, the RSI, as Raphaelia was alluding to, it is in the oversold territory, and it is moving towards that overbought territory, as not there yet. But I would be more inclined for a short on the stock rather than a long.
Sounds like you're lukewarm then, Yonatan.
I am lukewarm turning very cold.
Lukewarm turning very cold for Yonatan.
That's not hot in English.
Clearly not.
Yeah.
Anthony, how do you feel about Woolworths?
Unless the rand strengthens dramatically from here, I think the rating doesn't account for the risk of margin contraction. So not hot.
Not hot. Simon Brown, you shop at Woolworths. Surely you must like the stock.
I shop at Woolworths. I own Woolworths shares. I've liked it. I was selling some of my Woolworths stocks above 38 Rand just because I think it had run very high. And a couple of things were worrying me. One, the issue being, as Anthony said, where are interest rates going next? They are going up. I don't know when, but and maybe that's not even true. But certainly that's my sense. We might get another half point down, but in a year or two we're likely to have higher rates, and I think the Woolworths shop is going to get a little bit squeezed. They've had it very, very easy. So I'm not rushing out there and selling everything, but I don't think I'd be jumping into the stock at these multiples.
You're exercising caution, just like Yonatan. One more quick point from you,
Yeah, I just wanted to point out as well that this red line over here is the 200-day moving average, and we can see that it is clearly pointing upwards. But at the moment where prices are, it is just too far stretched above that 200-day moving average. So according to the my relative oscillation movement index, we could find that prices could in fact pull all the way back down to that 200-day moving average, and that will be a critical level for this for Woolworths. If it can hold above that level, then yeah, it could start pushing back up again. But I've got a sort of a water feeling in the waters that that this 200-day moving average is not going to hold, and we should see lower prices.
And for the English-speaking among us, that means you are still ice cold on Woolworths.